First and foremost, I wanted to say I hope you all had an amazing holiday weekend. You got to spend time with some loved ones, or you simply got to spend time by yourself, AKA me, doing what you love the most. Either way, holiday weekends are a great way to recharge our batteries. So I hope you had a great one and you're coming back refreshed and ready to tackle until we get to our next holiday. I think that's Memorial Day weekend. Can't come soon enough, y'all, right? Anyway, so another thing I wanted to note is I'm making a change to this format. I'm going to be talking about the week ahead. There's no reason to go back and reflect on the past week. I used to call it the weekly market update. We're going to change that. This is the week ahead. I also give that Friday wrap up. So if you need that information, you can tune in on that. So that being said, what are we going to attack here on The Mortgage Mouth? Once again, my name is Kevin Weedmark, AKA The Mortgage Mouth, coming to you every day, every Monday with the week ahead, every Friday with a wrap up, and every day with a daily dose. So make sure you hit that subscribe on that YouTube channel. But what do we have coming this week? We're going to be talking about smaller numbers, how that is going to affect interest rates the early part of this week. We're also going to talk about, are the numbers temporary? We have housing data coming. We get a sneak peek from purchasing managers. Spend, baby, spend. We're going to talk about that. Always on the radar, what that means. And then lastly, simply never enough. There is never enough data that we can have for ourselves or for our clients. So diving right in, let's talk about smaller numbers. Often when we're coming out of a holiday, just like people in our office, everyone sometimes likes to add that extra day. They were traveling, whatever the case may be. They typically would take a Friday or a Monday, couple it, make it an extended holiday weekend. So the same thing happens with traders. And 80% of the time coming out of a holiday weekend, there's less traders on the floor, which means that those moves can affect the overall market at a greater scale than they typically would. And what we often see is we see interest rates increase during that time. So what I'm saying is, I believe on Monday and Tuesday this week, with no significant data on the radar until Wednesday, I absolutely expect that to happen. I expect interest rates to creep up a little bit, but here's why I'm bringing it up. I don't want us to panic. There's no reason to panic. There was no data over the weekend that's to set off alarms, to make us concerned about longer term interest rate trajectory being higher. So I would not really get too concerned about it. And hopefully everyone took my advice last week and locked when we saw those little dips in the marketplace, so we didn't have to worry about this early onset of higher interest rate this week. The second thing I wanted to talk about are the numbers temporary. We're going to get some housing numbers this week. We're going to get existing home sales and new home sales. And are those numbers temporary, being that on a national level, all we're seeing is the news regarding increased inventory and a decrease in sales. We're seeing companies like Redfin, Zillow, all the major companies reducing what they thought at the beginning of the year is going to be home appreciation, home sales. Everyone seems to be moving in the opposite direction given the tariff news and everything like that. However, what I think we may see, because if you recall, every time we see rates make a significant move, which we saw over the last couple weeks, we see a spike in these numbers. We see an increase in home sales. We see an increase in new home sales when those interest rates get into around the mid 6% range. So my expectation is these numbers are going to come in fairly decent. They're going to come in, at least in my opinion, at forecast. But again, I caution, are they just temporary? Something to take a note of. Do I think it makes any long-term impact on interest rates or anything like that? I clearly do not. But it's something that we in the industry just want to be astute of, because this is the information that is being fed to our clients. This is what they're hearing on a national level, so we need to be attuned to it so we know how to counter it if necessary. The other thing we're going to get is a sneak peek. Every month you get what's called the manufacturing PMI, Purchasing Managers Index, as well as a services PMI. And what happens is surveys are done on both the manufacturing and the services side. And traders love this information and put a lot of weight on it because you know why? It's real-time data in their opinion. They're going out and they're surveying 400 executives on the services side and asking them, what are you looking at for prices on communication, hotels, restaurants? Where is the pricing on that going? Are we seeing the services industry on an increase from a pricing standpoint, which means that could be very inflationary. On the flip side, we get manufacturing. Manufacturing is the production of goods. Obviously, if you get a better than 50% reading on manufacturing, you would have an expanding economy in theory, which would be counterintuitive from the thought that we believe that we have a slowing economy. So these are going to be two numbers that come out on Wednesday. They both come out on Wednesday that are totally contradicting potentially one another, and something that you really want to pay attention to on Wednesday, because as we're coming out of this early hump in the beginning of the week, like I talked about, where we have less traders, everyone's going to be back in the saddle by Wednesday. So the traders are going to certainly digest that information. And the other thing it allows them to do, it allows them to kind of give a long-term strategy. They get real-time data to say, ooh, was I off what I thought was going to happen next month, 2 months, 3 months, 6 months down the road? And they can recalculate and make moves as necessary. So absolutely something to pay attention to on Wednesday. The other thing that we're going to have is we have durable goods coming at us this week. Durable goods are big ticket items. And just like we saw last week with retail sales, my expectation, we're going to see the same kind of numbers on the durable goods side. They're going to come in better than expectations. And the reason being is the fear of the tariffs. Consumers are fearful that these big ticket items and all goods across are going to see increased pricing due to inflation. So a lot of consumers, as we saw with those retail sales numbers blowing away expectations, is they're rushing out and they're making these purchases now, believing that prices are going to be higher in the future. I expect these durable good orders to come in higher than expected, but I do not see them as a potential market mover simply because traders are astute to the theory that, okay, if they're buying them all now and we're seeing that number go up, well, 2-3 months down the road, again, forward thinking, one would believe that those numbers are going to have to come down because those big ticket items have been purchased. So that is absolutely something we want to make note of. But the biggest thing that I'm just amazed by, right? And if you've been listening to me now for well over a year, I mean, I'm just astonished at how much Americans love to spend money. We can't say no. It doesn't matter what the environment seems to be. And it doesn't matter because if you look at the data from a sentiment standpoint as well as confidence, plummeting numbers. Some of the worst numbers that we've seen since 2002. Some of the worst treasury moves we've seen since I mean, it's crazy, but it doesn't matter because what really matters is, are we still opening up our wallets and are we still buying those goods? And the answer is yes. So a number we want to make sure that we take a look at, but I really don't think it's a big market mover simply because the market's going to be forward thinking. The other thing that we see, and it's something I wanted to note, every week, it's the one piece of data that we get every week that is consistent throughout the year, and it's initial jobless claims. The labor market is obviously something the Fed is really looking at. They want to make sure that they don't see a huge decline in the labor market. That would obviously be leading indicators of a potential recession and things like that. So that is one thing. It's always on the radar. The labor market comes full circle every week. Now, is it the big non-farm payrolls and all that kind of? No, it's not. But it's one of those data sets that comes at us every week that kind of slips under the radar on Thursdays. But make no mistake, it is something that traders are going to be very keen to and could be a potential market mover should it miss its mark drastically. And then the last thing I wanted to talk about is simply never enough. And I'm talking about data, and more data. I don't know if a lot of you are aware, I do an Instagram live on Thursday mornings called What's Brewing. My co-host, AKA my partner in crime in that, is Jennifer Goodman. And I bring it up because I bring it up as an example. During these times, right, when times are going crazy, data is not as important simply because the market is moving so fast that there's a frenzy and consumers don't really have time to think. They got to react. They got to make very quick decisions. So if you data dump them, it kind of makes them in quicksand, and they don't want to be. They want to move. But in times of uncertainty that we are right now, where consumers are in quicksand, consumers are hesitant, they want more and more data. And I used this past week as an example because Jennifer brought to the table during our show, what were the numbers in March of 2024 from a sales number standpoint? And what do I mean by that? I mean a sales value. What was the price of homes and how many sold during that time in 2024 in March to 2025? And here's the unique thing. She broke it down by zip code. We talk about how hyper local real estate is all the time, and it was absolutely perfect because you're hearing it on a national level. I talked about it earlier, right? We're hearing how much of a slowdown. You see Zillow redoing their numbers, Realtor.com, Redfin, everybody's redoing numbers for the lower. We looked at some zip codes that had over a 50% appreciation here in Austin. If you look at the national news, you would think that Austin is in just a buyer's market all over the place. Clearly not the case. There was at least 7 to 10 zip codes over 20% appreciation year over year. And it brings me to the point that you cannot have enough data right now. We all need to be sitting in front of our computers and digging deep and putting our consumer hats on, taking ourselves out of our roles as the professional and saying, if I'm that person, if I'm my client, what information would I need to get me off the fence, to get me to pull the trigger, to get me the information I need to make a great educated financial decision? And I thought that was wonderful information because on the flip side, it also showed areas where we had huge decreases. So whether it's going to create data that's going to give your clients an opportunity potentially, because they're like, whoa, I didn't realize that area, that zip code, I love that zip code, it's down 30%. Well, maybe now is the time to pull the trigger. Or misinformation, like I said, where they're showing on a national level, Austin's on the decline. We got some areas, Brentwood in particular, up over 50%. Now, I mean, that's year over year. That is massive. And you would have no idea unless you did those numbers. So that's the point I wanted to make. Is bottom line is you can't dig far enough. We need to all spend time in front of our computer, and we need to be looking at things outside the box and how can we pull the best numbers possible to assist our clients. All right, y'all, I hope you like this new format. I hope it's a little bit not as lengthy. No reason to go after what happened last week. You want that information, hop on that YouTube channel, and you can look at the Friday wrap up out there. Once again, my name is Kevin Weemark, nationwide mortgage lender. Wherever you are, I would love to be a person that you call to assist you. You can feel free to call me, text me, email me. Also, please jump on that YouTube channel, AKA The Mortgage Mouth, and take a look, give a subscription. I also on the daily dump a 2-minute video to give you a very quick outlook of what happened that day, how it affected interest rates, and maybe a little snippet of what you might see tomorrow. All right, everyone, have a great week. I'm around as always should you need anything. And if you're a client out there, give me a jingle. I love talking this stuff. Regardless of what the questions are, I would love to get an opportunity to earn your business. All right, y'all, happy selling out there, and I will talk to you every day this week, and I'll give you that Friday wrap up on Friday. Cheers.